Right, so what is happening? I hope you guys are doing good. I want to start off with the basic concepts we have in trading. So I'm going to show you the foundation of SRC trading, which is a RAJABANKS strategy, which is the one that I use for my trading, right? The exact framework that stops you from trading like a fucking emotional little gambler and trading like a real professional trader, right? So let me just start off with the basics, right? Discipline is 100 times better than desire. You want to be a nice trader, right? But you need to know if you've deposited like $50 or $100, you're not gonna make a fucking $1,000 in a day. You're gonna have to move on with a certain percentage of the capital as profits, right? 500, you make $9. That's more than enough, right? You move on. Now, so the basic framework of the SRC strategy, the RAJABANKS SRC strategy, is support, resistance, and time frames, right? This is as simple as it gets. Please do not jump into ICT or SMC of all of that bullshit, because even though it might work, it's going to take a lot more time to understand the strategy itself, right? So starting off, we have two basic types of candles. We have a bullish candle and a bearish candle, right? Now, a bullish candle opens up at the bottom and closes at the top. What this means is that the overall movement of the candle was bullish, that it went up, right? And the bearish candle is literally the opposite, where it opens up at the top and closes at the bottom, which means the overall movement of the candle was bearish, hence bullish and bearish candles. So now let's move on to the support and resistance concepts. So say, for example, you've got a bearish candle forming, right? A bearish candle is a candle that goes down. This is bullish, right? Bullish and bearish, as simple as that, right? So when you have a bearish candle forming and right afterwards you have a candle that forms like this, a bullish candle that is. So once this candle forms, essentially you have a support that's formed right in front of you, right? So a bearish candle followed by a bullish candle is formation of a support, right? So that right there is a support. Now literally the opposite, when you have a bullish candle forming, right, which is followed by a bearish candle, this right here forms a resistance, right? So this is a support and this is a resistance, right? So a bearish candle followed by a bullish candle is a support, and a bullish candle followed by a bearish candle is resistance, right? So that's as simple as it gets. Right, so just to put that idea into practice, right, I want you guys to think about where the support is and where the resistance is, right? Now, resistance might be a bit tricky, but let's just think about the major support that you have right in front of you, right? Pause the video and think about the support. Right, so now that you've thought about the support, I'm going to go ahead and draw out. Right, so if you just thought that this is the most important support, then yes, you're correct, because this is where you've got the most rejections happening, plus bearish candle, bullish candle, bearish candle, bullish candle, right? So it keeps on going like that, and this is a proper support. Now this is a support as well, right? And say for example this candle closes, this is going to be a support as well, right? And now literally let's look at the opposite, right? So now ignoring these levels, right, ignoring these, which resistance here do you think is the strongest, right? Ignoring this, of course, right? So just pause the video and think about that real quick. Now if you believe this is the strongest resistance, yep, you're correct, because you have a bullish candle forming, a bearish candle forming, same happening here, right? This was a resistance, but once you have a candle closing on this resistance, it does not remain a strong zone, right? So we just ignore that zone. Right, so now that we've cleared out the support and resistance concept, I want to focus on the time frames. Now the ones that I've always used are these ones, right? So usually I would stick to the 30-minute time frame, right? But we also have the 15-minute time frame. Then we have the 1 hour candles, 4 hour candles, and 1 day candles. Right, so these are the time zones that we're going to be focusing on when it comes to the SRC strategy. I prefer to trade the 30-minute time frame because you have very strong confirmations and you have patterns forming where you can take a trade and all that, you know. So for those of you who do not understand what these time zones mean, right? For example, if you're looking at 15-minute time frame, right? What that means is that, for example, a candle opens up at 3 p.m., right? And closes at 3:15, quarter past 3. that's going to be one candle, right? So say for example, this candle is a bearish candle, right? Bearish candle always opens up at the top, closes at the bottom, right? So when it opened up, it was 3 p.m. But when it closed, it was 3:15. These wicks, they represent the movement of these candles. Now allow me to elaborate these time frames a bit more. So let's move on to the hourly time frames, right? Right, so in this chart, each and every single candle represents 1 hour, right? So if you look at, for example, this candle opened up at 2 p.m., right? As you can see on the bottom. And this candle closed at 3 p.m. because this is an hourly candle, as it says in the chart, right? So it opened up at this point and it closed at this point because it's a bullish candle. And so it's pretty much the same for any other candle, which is, for example, that this candle, for example, opened up at roughly around 5 or 6. So if it opens up at 5, it closes at 6 because it's an hourly candle. And if we look at 30-minute candles, if it opens up at 6, it's going to close at 6:30, half 6, right? Because it's a 30-minute candle. Right, so let's look further into the anatomy of these candles, right? Now, I don't want to focus on bullish or bearish candles when it comes to the anatomy because every candle is pretty much the same apart from the opening and closing point, right? Now, the opening and closing point is going to tell you what type of candle it is, right? Now, say, for example, this is a bullish candle, right? It closed like this, right? But let's look at what happened when it opened up, right? Like I told you guys, a bullish candle opens up at the bottom, right? So say, for example, it opened up right here, right? It went here first, hence the wick. This is called a wick, by the way, a wick. It went here, it came back, right? It went on going up, it came here first, right? It came all the way here first, and then afterwards, it came back down, rejected that point, and closed like this, leaving a wick at the top, right? So this is how a candle moves, and essentially the anatomy of the candle works, right? It opens up at the bottom. The wicks represent the displacement of the candle before it closed, right? So maybe it went upwards, but then it started rejecting before closing, and hence you have a wick instead of the candle body, right? So here to here, this is a candle body, right? So that's pretty much what a candle is, and essentially what I mean by basic concepts when it comes to support and resistance and SRC concept on a basic level, right? Now coming back to the slide, right, I want you guys to know that these are just the basics. Your primary focus is that the market does not keep on taking punches on your capital, right? Because sometimes the price action is not going to give you opportunities. So in those circumstances, you have to protect your capital, right? That is pretty much the end of this slide, right? What I want you guys to do is wait for the next video where I'm going to explain you guys how to take entries and what time frames to focus on and how you're going to look for confirmations and all of that stuff, right? So thank you guys for watching. Ta.